Okay. This is wait for it. And what I'm going to be covering is I'm going to make a series of videos that are going to cover the basics leading up to more advanced things. But for now, we're just going to start off on the very basic things like candle formations. How is price action formed? What are these lines here? What do they mean? How do you use them? Just some very basic things, because I feel like everybody needs a starting point. And I feel like probably most of my viewer base is going to be newer traders. So in order for, I guess, them to be on the same page as me when I'm describing things, it's probably best to kind of cover everything from the beginning and move forward, right? So what you see on the screen now is this is NinjaTrader, and I'm going to use between NinjaTrader and TradingView. TradingView, you can look at charts for free. You can get free data with TradingView for free on certain like stocks, but not as much on like futures and other things. Crypto, I believe you can get free all the time, and I'm sure plenty of you are trade crypto. I'm not a huge fan of crypto. I don't really see the point yet. I'm still waiting for everyone to, I'm waiting for businesses to grow and use crypto in a real world setting with real world items. There is one called Penguin USD. Was it Penguin? Hold on, let me find it. What is this? Oh, Pudgy Penguins. All right. And so Pudgy Penguins, I don't know much about the product. I just know that they are in Walmarts, and Walmart's like one of the largest shopping areas, accessible to plenty of, all the country, all the United States, and some other places in the world. So they have a huge reach. So they do provide items or products that Pudgy Penguin is selling to or in Walmarts, and they have they're like little stuffed animals or something like that. But you have like a QR code that you scan, and that links you to the crypto part of it, and it gives you options on how to benefit from their token. I don't know much about it. I just know that there is a real world item for sale in a real store being bought by real people, and it has a token related to it. So these are the things that I'm talking about that are kind of what I need to kind of get me intrigued into it. So things like that, if I feel like if you're going to be looking at something, it should have some type of value, real value, not just inflated perceived value. And I'm sure that there's a case point. You're going to tell me that there's a bazillion reasons why Bitcoin and Ethereum and all that are, and yeah, they have a lot of projects going on, and I get it. But again, these are my stipulations. So anyways, that said, a chart is a chart is a chart. It doesn't matter what you're looking at. It could be options, it could be Forex, it could be crypto, it could be was it funds or 401k, and just different types of market things that you would see on a chart with candles. And all charts are the same. You read one, it's going to tell you what's going on in the market. You can read them all the same way. Yeah, there are certain things that certain ones like Forex might have certain things that that are slightly different from how other ones are. So you might treat those variations differently. But I mean, that's for you to discern if you're trading Forex. That's for you to discern if you're trading crypto. But as far as like the basics, as far as like a chart is a chart. It's based on psychology. It's greed and it's fear, right? So let's put that up there. Put greed. I might need to make this bigger, huh? So let's see. So in NinjaTrader, I set my macros to be able to type things faster, or to use the tools, the drawing tools. And if you want a video on that, please comment in the section below, and I'll dedicate a whole section to something like that. Let me see how this looks. Is that big enough? Do I need it to be bigger? Let me make it bigger just in case for the seeing impaired there. All right, so we'll say, and then you go to template here. So if I want to make this standard, so I don't have to keep doing this, save as default. Boom, and I'm set now. I hit F12. That's what I like to write with, and then here. Okay, so you understand, what greed and fear is. There's very little greed on here, but you can, a case can be made that this is greed here, this little run up right here. And there's also something you can do on NinjaTrader is you can actually center your price action, go to data series, and then you scroll down, and there's 3 boxes here, right here. Boom. The one in the middle, in the center, you just check it and hit apply. And then whenever you scroll, it automatically puts your price action in the center. So if I was to just move my chart over here like this would be better. All right. So greed drives the market up, right? So let me see, how do I explain this? Every stock, every fund has X amount of shares, right? And so whenever X amount of shares are being held, let's say the mass majority of all the shares are being bought up in this sideways price action like this. What is sideways price action? This is where either it's accumulating or they're taking profits and distributing. So you're going to hear these terms a lot. And so I'm going to draw a line across this area here. I know I'm jumping right into this stuff, and maybe I should be covering like what is a candle and stuff like that. I'll go back to that. But for you to understand what the market is, you understand what the psychology is, and it's about greed and fear, right? Okay, so the perceived value of a stock is what makes the price action move up and down. So the mass majority of the people are, deciding whether or not the price of the stock is, worth more or less. And so because it landed in this area and you see it went sideways for a long period of time, F5 is what I use for measuring. And you can go in here, and so let's say this is my, this big candle, red candle pushes down. So I wouldn't use this candle, but the candle next to it kind of starts your sideways price action, and it literally ends over here before it breaks out to another green candle that matches this green one or this red one over here, right? And so there, boom, we got 44 candles inside this area. This would be called a huge support area, right? You also have a massive influx of volume right here, right, where this dipped down, and then you see this long wick right here. This long wick. Wow, I gotta reset all my. I just installed NinjaTrader on here again, and so all my stuff is not really the way I like it. It bothers me. So sorry for taking your time and fixing this here. But you can learn how to set all these things. Save as default. Boom. Look at that. All right. I am doing a replay. It is Saturday. So I like to do these videos like this on Saturday because there's nothing to do in the market. I'm extremely bored. Yes, I'm an addict. So am I profitable? No, not yet. I have a lot of things that I have to work on myself. And so this could be something that could be relatable to you on your journey through trading, is you have to control your fear and greed. You have to control your desire and your need for money, right? You can't trade if you are in need of money. Like if you are constantly afraid of losing money or being stuck in the situation you're in or having to pay bills or whatever, it is extremely hard to be profitable in the market. You have to get your mind set off of that. I just came out of a wreck. Well, I didn't say just, but I had a really bad wreck 10 years ago, and it put me in a downward spiral, and it took me out of life. Took me 10 years to kind of really try to get back to trying being normal. But I spent that time studying the market. And so this is what I'm doing. I'm teaching you what I've learned in the market. I have had success in the market. Yes. I have made money in the market. Yes. Am I consistently profitable yet? No, because I can't control my fear of being stuck in the situation I'm in, that I've been in for the last 10 years. And that's a psychological thing that happens. It's a thing that I deal with because of my wreck. It literally put me in a downward spiral and changed. I mean, I woke up one day and I wasn't the same person I was when I had my wreck. Or before I had my wreck. I was able to start painting portraits immediately. So it changed my life. I had acquired savant syndrome. There was just a lot of things that were so not who I was that I had a hard time relating to who I was. I mean, it's just as simple as I can put it. So anyways, enough of that. Let's just move on. So am I close to being consistent? Yes. Right now I have a system that I'm working on, that I'm doing right now, that I've been very consistently profitable. I still have problems with my greed. I have to control that. I do still do stupid things that causes me to get in trouble. But for the most part, I've got a prop account that I'm working on. It's at $9,000 I have to make, and I'm $3,000 into it, to the good. So in about a week's time, and I'm trading casually, outside of work, or trying to trade casually outside of work, and that's where my greed comes in. Is I want to trade nonstop. So it's been good for me though, and I'm seeing success. I've already, basically, if it was a $3,000 account, I've already passed it. But anyways, so on to the lesson here. Sorry again for ranting. So you see this candle here? It's long wick. So you have like this sideways price action, right? How do you know you're in sideways price action? Well, you know that because you see this push down, and then price action stays below the high of this whole time. Well, how do you know it's not just dropping? Like, how do you know it's, well, because when you look and you draw a line across the bottom here, you see that it very rarely comes down into this area below this line, right? Only twice did it come down here, and then stayed above it and actually bounced off of it right there. And so we'll cover all of this, in this lesson. So you're in sideways price action, which is, let's just go write it up here. It's called consolidation, right? So consolidation is when buyers are soaking up the shares. And how do you know that they're soaking up the shares and not getting ready to distribute? Well, we are kind of at a slight high here, like it did, slightly go upwards here. So we can draw, F3 is my ray line. And so this will put, what you want to do is you want to try to match up two important wick to wick areas, like the low of the wicks, and at least one further out is how I like to do it. And so that gives me a good like ground or basis on like what my trend line is, right? And so you can see that we're in an upward movement here, and so you would think that maybe this is distribution. And yes, I can see the other side over there, so it's kind of cheating, right? But here's going to have some of the ways that you can look and tell that it's not distribution, right? So big push down, but doesn't break the low right here. This is called a break of structure if it broke this low, but it didn't, right? So not a break of structure, right? So that's step one. That's, you're not in, what's it? Not in distribution. So say not in distribution, and then we'll say okay, no break of structure, or BOS, which is short for break of structure. So you got to push down from a high. You're not breaking the structure down here, the low of this last push down, right? Which has been held for probably what, almost 34 candles there, 20 some candles there. And then you have a push up that doesn't break the high of your previous high there. And it constantly is bouncing in this area and then pushing back down and then soaking back up. So now the next thing to look for is, do I have a long wick coming from below my low level here where I'm drawing my consolidation area? And yes, I do right there. And so this would be my first sign that I'm truly in a accumulation phase right here, right? Or consolidation. So we're in accumulation, which means that we're gathering up shares, right? And right here you see that the third proof that we're in accumulation or consolidation that's bullish, right? They would call this reaccumulation actually, but anyways, because it's part of the bigger move here, right? We already have a move going up, and so this would be reaccumulation. And the wick here soaking up these shares, and then you see the massive spike in volume right here, which means that it's almost triple the average, if not quadruple the average volume, or more, like 10 times the volume of the average volume in this one candle. And so that's proof that there's a tremendous amount of buyers down here, right? And so this is your support level down here. And it is kind of annoying that all the letters are the exact same size, but whatever. All right, so support level. And so we'll get rid of this guy here. Oh. And we'll move this arrow if we can. This will be my pointer. And so then after your support level here, you did I came down again and grabbed liquidity. This is what's called grabbing liquidity. And there's several terms here. They're all kind of the same term, really, but you're going to hear different ways from different people, right? But right now, what's really popular is liquidity, which is, I've been saying that forever, but now it's all of a sudden getting a highlight. So what is liquidity? Liquidity is the level where all your orders are sitting under, like all your stop losses, all your buy orders, where there's a huge amount of support that bigger fish are waiting to jump in on the market. So when the market's really bullish, and it starts to run out of steam, well, it's because it's petering out. It's exhausted, right? It needs more shares. It needs more fuel. It needs more fresh buyers to move the market up. And so how does the market work? It works off of, it's like an ebb and flow. You get to a certain level, sellers start stepping in, it makes the stock heavy, right? It makes the price drop because sellers are shorting it. Or in other words, your buyers from back here, are taking profits up here. And because they're taking profits, that's a short, right? They're selling their shares. So those shares are going into bears' hands, right? So you got the bears and the bulls. Bulls want the market to go up, bears want the market to go down. And I'm throwing all kinds of stuff at you, but you can watch this over and over again. So the bulls are driving the market up. And then when you get to a level where there's uncertainty, this little indecision candle here. So an indecision candle is when the candle has wicks on both sides and the body's really small. That means that it's not as certain of this price area of whether or not the stock is valued at this point. Like it's worth being at this level, right? It's uncertain. Or and another way to look at it is the buyers have deemed that this area is a highly probable area to take profit at. and bears have deemed it the exact same thing. This is a highly probable area to take profit at. And so with those two combined, the mass majority of people both agree that this is a good area to take profits. And so therefore the price stops and starts to drop. And then it hits a floor and bounces, right? And so this is the natural, it's called the automatic response. It's the natural area where support lies that people believe that the price should stabilize at, right? And so that you can also look here and see that it also coincides with the high of where price was bouncing sideways before it got into this area, right? And so support was created because of this bouncing right here. And as it rose up and got bullish and took off and made higher highs, it ran out of steam here. And people took profits and bulls or bears stepped in and pushed the stock down. Well, buyers stepped back in at this last area where it went sideways for, let's measure this just so we know. I like to measure things to get a gauge on the timing. Yeah, so 22 bars, I was right. And so about 22 bars of saying this is the high, or this is a good area of support. Plenty of buyers in this area, right? And so we know that here, if I do this area like this, now you can see that this is the high of this buying and selling, and this is the low. So obviously there is support here, right? Buyers are stepping in here and sellers are stepping in here. So in this area, there is a lot of volume. There's a lot of activity. So now move forward, you can see that price gets to the area here. Sellers start to sell, buyers start to take profits. Boom, price comes down and naturally bounces off of the area that has the highest volume in the recent past. And then so there's buyers waiting to buy right here, and it bounces up, and then it doesn't go back as high as it did. So then it comes back down to grab more liquidity in this area and retest. And so retest is when you push past the low of your previous candles, and basically there's like small levels of liquidity here to see if that's enough to push it up. And there's not a big following right here. So then when they go to test up right here, it fails to go past the high of this candle here, right? And so what do you see here? And this is going to be your first real thing that you need to take from this, right? Let's look at this. All right. The first real thing that you need to learn from this, other than all these basic terms here, is this part right here. All right. So let me see if I can make it even bigger. All right. So what do we see here? I'm going to move this under here. And I'm going to bring this down so you can see the high. And my picture is not in the way, right? Okay, good. So let's do it like this. I'm going to bring it down just a notch. There. All right. So you have a high here where sellers stepped in and buyers took profits. You have a low here where the previous sellers were stepping in and buyers were taking profits, right? And then back here you have, I'm going to draw this line right there so we can see. This white line right here is the low where buyers were stepping in previously. So now forget all that. Just look at this part right here. Okay, and I'm going to put a circle around it. I use F11 for my elliptical, and maybe I'll include this one candle there. All right, this right here tells you a story, okay? We had a bullish candle come up after this red push down. We had an indecision candle here with a wick going up past the high of this candle, showing that there was a potential to the upside here with a very small wick to the downside there. So when you think of test and retest on a one candle level, this candle tests the high and tests the low, and it closed bullish, not very much, but it closed bullish, but it potentially was higher here. So there is room to the upside here, possibly even more to go than there is to the downside, because the potential to the downside was very small. Let's say if we're talking, you know, what is this? Looking at gold here. So your potential downside was only let's say 0.5, right? So 0.5 to the downside versus 1 to 17. So 17 to the upside, 0.17 or whatever, 1.7 to the upside. So your potential was almost triple to the upside. And so where do you think price is going to go just off of that alone? It's going to go up, right? Or it should try. Maybe bears step in on this candle and they're like, oh no, we're going to shut this thing down, and they dump it. Anything's possible. But if you're just going off of the psychology that's here, the potential to the upside is far greater to the potential to the downside. And so the next candle, it does go up, right? And it still peters out just slightly above where it was before, and then gets shut down with almost an equal candle. It doesn't quite, it does wick to the bottom there, so potentially it does erase this candle almost completely, or just leaves like a sliver, here of that candle, which means that if this was just a wick left right here, then you would only have like another small green candle, which means that's unable to go higher here, right? If you think of it like if you just delete these two and just left a little wick there and a little indecision candle here, and then you'd have another indecision candle here. So the inability to go up is showing here, because when you have a green candle and a red candle that are of equal size, they basically negate each other. It's like they never existed. It's no different than what a doji is. So a doji is a true doji is just a candle with no body and a line. That's it. So the body opened here, it ran up, and then it came down, it ran down. So it was green, it went red, and then closed back at 0. And that's a true doji, right? And so an indecision candle is just anything with a small body that relates this kind of structure, right? So doji right there is a true doji. Put a circle around it. Oops. Well, true doji. Indecision candle. Indecision candles found at the high are signs of, good signs of reversal. Indecisions found at a low, or if in succession means consolidation, and at a low would mean like a sign of a reversal as well, like this. And so now when we look at these two candles here put together, they negate each other, and you just left with a little sliver right there. So if I was to take and erase, oops, this much of this candle, oops, I got to do it like that. If I erase that much of that candle, then you would only have that little bit of, let me change this. I did this. What is that? Boom. All right, there. Now you can see it. And so now let's take and help me. All right, there. So now if I did it like that, now you can see what I'm talking about. Because the red candle was the same length as the green candle, or almost the same length as the green candle, it erased all the area above it. And so this is what is left, is this little sliver of a green candle. And technically if I had a little bit lower there, you would just have like a little doji basically here for the red candle. Whatever. There. And then you would have this little green candle here. And so what that's telling you is that it's the inability to go up. The price is unable to go up from here, right? And then you look at the wick here. Now look at the wick. The wick surpassed the low of these other candles over here. And use this so you can see. It was unable to pass. This wick passed the low of these wicks over here, and match the low of this green candle over here. So again, now what's the potential? The potential to the downside is now greater than the potential to the upside, because these negate each other. And so you get one last test to the upside just to prove that theory, yeah, and it fails to go higher. It basically is only half the movement of this right here, and then ends up closing red underneath the low of all of these little candles right here, which is showing you that it's going down, right? This is your proof that it's going down. So you could short it from right here to here, and you're like, well, that doesn't look like very far, but if we were to measure this from the low of this candle to your extreme low down here, that's 7.3. And so this runs in basically like dimes, right? You have dimes. So you have 73 ticks here. And a tick is just a measurement, right? And so in this case, in gold, a tick is worth 10 cents. And so that means you have, in 7.3, you have 73 ticks to the downside. Well, gold is $10 per tick that you get paid on. And so if you were to short this from here at this level down to there, then you would have made $730. So is it worth your time to try to understand price structure? The old place I used to work at, Liberty Trading Company, says no. Or Liberty Trading Club, whatever. They say no, reading price action is stupid. It's too hard, but it's not. The only reason they say it's too hard is because they're looking at it so fast that it's impossible to do the price action for a normal person, per candle. But if you're looking at it on a 15-minute scale, you have all the time. You have 15 minutes to decide what you're going to do, right? And then decide what the candle should do. And, if it sets up the way you want, then you can take your trade. You don't need to predict a reversal. You just need to wait for the proof and then trade in the momentum, right? We know that our support level is down here at 3445.6, right? So I drew that because it was the high of the consolidation to the left over here, right? It was the high of the consolidation to the left over here, and it's the low of this move right here, right where it bounced, right? And we have wicks that go into this area right here, so it's it's attempting to break out of this area and try to go up. It can't. We know that. Well, I guess we know that it's consolidation because it hasn't proven to us that it's not. It hasn't broke the low of the structure over here, right? And so that means that this is a support level, which means that this is consolidation until proven otherwise, until it breaks the support. So therefore, it is bullish, and there is nothing else that you can say that changes this. It is bullish until it breaks the structure, right? And so that's the only thing that you need to be concerned of. Do I have a move going up? Yes. Do I have a move going down? Yes. Do I have a move that's breaking the low of my last low over here when it started moving up? No. It is bullish, okay? So the only thing you should be looking at is technically longs, right? But in this situation, I'm showing you that you can do both, right? Because we know that right now, the most certain thing right now that because we're so soon into this consolidation period, because consolidation will usually last about 34 bars, right? I'm just going to go ahead and tell you that it's going to last. Where do I get that number? Don't worry about it. It's going to whole nother thing. So your consolidation is going to last for 34 bars, right? So if you're only within the first 9 bars of consolidation, then if you're looking for a trade, either you're going to wait all day for it to get out of consolidation and hope to find the bottom and reverse and jump in, and then you just waste all the time, or you can just find a simple trade while it's in consolidation, right? And we know that it's going to bounce inside this area, and you might even get a manipulation to the downside here because when you're consolidating and gathering up shares, the big fish don't want to buy where you're buying. They want to buy down here. And they're preventing going down here to show you that there's a support here, a level here, and so that way they can manipulate it like this. And then look at the response. It's huge, right? That's almost that's basically another 73, 80 tick run right there, off of just dipping into this liquidity area right here, just slightly less than it did over here. Well, a little bit, probably about 0.5 or whatever, less than it did over here. And that's how much of a response. So what happens if I come down here? What's going to happen, right? That's how you have to look at it. We spent 22 bars over here building up liquidity over here. What kind of stops are sitting in this area on these bigger fish? And how many more shares are we going to gather when we dip into this area down here than we are right here? And then what kind of response are we going to get off of that if this is the response we're getting off of just this little bit, like just a double in volume right here, just double in volume, not 10 times the volume, double. So we know that we're bouncing in this area. We know that we're struggling to go past this area because I just showed you how to use candlestick math. This is what this is called, candlestick math, to surmise what's going on with price action, right? This looks bullish, but technically this red candle is slightly higher than that green candle, right? So it's overbought. And so that's the inefficiency, right? But it's showing you that they're shorting it down. They open it higher to short and basically delete this candle. And they left just a sliver of this green candle for a reason, to show you that it's bullish, but that it's just not able to go higher from where it's at right now, right? So now, then they come down and they shove it down here in order to grab liquidity, right? And so you have this long this long candle with this wick right here, and it's soaking up the liquidity underneath all these candles that they just built. So anytime you get 2 to 3 candles that are holding a level, and then you go and you break that level, those 3 candles were to build liquidity right here for it to steal to try to go up. And it's basically proving that there's not enough liquidity off of just the buyers that we have right now in this area to run it up. So what do we have to do? We have to run price down to get more liquidity to run the price up, right? We gotta think of it like this. I have a bus full of people, right? And we're driving, with several stops along the way, across the state or the country or whatever. And I get on, everybody wants to move from where we're at from the bus stop to the next, to go further across the country, right? And so we drive for hours, and then we get to a certain point and we stop, and half the people or more are like, I'm ready to get off. I want to explore this area. I want to go to this mall. I want to go check out what the city has. I want to look at the monuments or, whatever, parks or whatever is going on in this area. I want to get off. So over half the people want to get off the bus, right? So what do we need to do? Well, we need to come and go to another bus stop and reload on buyers who want to travel across the country to get going again, right? All right, so what do? Well, we come back to an area where we know that there's a lot of people waiting to go on this trip. And so we drive to the support area, and we let off the people who are done driving and wants to start riding and wants to go, explore or whatever, or get off. And, we pick up more people and we start driving again, right? And then we go for another couple hours, and it's just not enough. So what do? We need to go to another area that has even more people. So let's imagine that every time I'm pulling off, I'm stopping in a bus stop, and let's say they're minor cities, right? And so I stop at a minor city and I pick up some people, and I see if that's going to be enough to refill my bus, to get enough interest to get me going. And let's say each person gives me enough money to buy enough gas in order to get there, right? Well, the amount of people I pick up isn't enough to get me to where I want to go. So what do I have to do? I got to go find some more people. So I need to go to a bigger city with more people. So where is that at? That's below my support level. So I'm going to drive below that because this is an untapped level. I haven't been here yet. And I know there's a plethora of people there because I stopped there before, and they drove me all the way up to there, right? It got me across country. All right, so now I come over here, and so let's say I stop at a big city here, and it's not quite exactly where I wanted, because I'm just impatient, and I just want to get what I can get and see if I can get there without, human nature. I just want to shortcut my way to getting to where I want to go, right? And so I go a little bit further than the last time, but not as far. and I pick up more people, and it takes me right back to the same high, and I fail to hold this area, and I drop back down, right? But it was a good response. And so then I pull back, and I stop at another stop, and this time I'm breaking the lows over here. This one, this one candle in the middle intermediate area, and it gets me even higher. But I'm still not able to hold this high. I'm still not getting to where my destination is, right? And so what do you think is going to happen? It's going to drop, right? So then, I try again, maybe, boom, but I never make it back to the same original high. So then I drop, right? And so then I come down, I'm grabbing liquidity off this area. Do I try again? Probably. I try again. Nope. Okay, well, they decided they want, oh, this is the big candle. I didn't see this. I'm sorry. You got the big candle here that comes all the way down, right? And so this is where I guess I give up, and I'm like, okay, I can't make it without going all the way down. So then I go all the way down to this level right here, right? Because this is the level that we deemed was the low of my last consolidation area of 22 bars. And then I gather up all the liquidity, and I'm tapping the exact same area, even deeper than I was then. And so I'm breaking stop loss. So imagine this, all these stop losses of all these areas, let me grab this. All right. So all the stop losses that are put, because when you enter a trade, every time you enter a trade, you're putting stop losses under your last low here, right? So you're basically poisoning yourself to be hunted, to be liquidity for the next move up, because every time you enter a trade, you put your stop underneath your last stop, then that's the last low. That's going to be where the prime area where you're going to go and grab liquidity to take off. So, how many times is this broken, right? Once here, and then twice here, right? And so that's why it's important, like in this area, we know that it's going to bounce around for 34 bars. Yes, it's probably going to make higher highs or whatnot, but it's not going to make this high up here until it comes down and grabs this liquidity at the bottom here. So you probably, in your best interest, is probably to short it once it fatigues out, and it shows you, this bar right here shows you that you can't go any higher here, right? Negates this. We're unable to go higher, basically a doji here. And then you get this bar that closes lower for the first time out of these 4 bars, showing you the potentials to the downside. And this wick shows you that there's more potential to the downside as well. Just like this wick showed you potential to the upside, and then this candle followed it. You follow with this right here. No potential to the upside on this candle, and then boom, it shuts down. And it still doesn't go back to the high of this candle. It shuts down again, and it grabs this liquidity, right? And so your stops are here and here, and so you broke this level, break of structure right there to grab this liquidity to try to run it up again. This failed to make it up to the high here, so what do? You break this low here back to the previous low, which is where the big fish are, and even deeper, because if you go back, you'll see that this is where the stops are here, right? And so there you go. Now you've come down and you push down, and you not only broke all the stop losses of all these areas where people have put their stops at and entered trades at, you grabbed all the stop losses of people trying to go bullish here, all the stop losses of people trying to go bullish here, and all the stop losses, let me say it again, here, all the stop losses of the people who tried to go bullish here, all the stop losses of the people who tried to go bullish here, and then all the stop losses of the people who tried to go bullish here. And not only that, all the stop losses of all the people who tried to go bullish from back here. All these people. Every single one of them. All 22 bars worth of people. All this volume right here, all the stop losses lie underneath this line right here. And so if I just draw a horizontal line here, boom, there. All right. And then you scroll over, boom, you crack it right here, and you just you just gathered up all the liquidity over the last, 60 bars. All this volume, you grabbed all of this right here. You just cracked all the stop losses on this. And now where's that going to send you? If this sent you to here, then our anticipation is that once we grab this down here and we've consolidated all this, then we should be probably going, this times 2, we would hope, right? We'd like to see that this goes times 2. So I use squares as a measuring tool to see where price action should go. And anything less than this is a fail. So we'll say that. And then if it fails to reach this area and you see a wick up here and a red candle, then it's most likely going to dump, right? And so I know I've got a mess up here, but hopefully this is helping. Get rid of this. And so then now you look over to your right, over here, look at if you draw a trend line, right, where your wicks, the majority of your wicks lined up right there, that's telling you that it's bullish and it's bouncing, right? It's starting to make its way out. And I haven't talked about these lines yet. These are EMAs, right? And so we got, 17, 34, and I believe a 5 in there. But they all cross right in this area, pretty much exactly where this arrow is pointing. All the lines cross right here, these EMAs. How are the EMAs or SMAs moved? SMAs are made based on the number that you set it to. So if I say 9 bars, then I'm taking the last 9 bars from here to here. That's 8. I was missed it by 1 here. Okay, so I'm taking the average of the close of every single one of these bars. So this closed low, high, high, low, high, 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 low, high, and low. And so then I average out all that, and it should be, well, exactly where this, this line would be. It would be kind of in between. I think it'd be like right here somewhere. Oops, here. Well, I'll learn to draw one day. Here. This is probably where the 9 would be. I don't have a 9, I have a 5, and I have, a 34 and a 17, but that was just an example of what, what a SMA is, and simple moving average. And so all 3 of my lines cross exactly where this arrow is right here. And what does that mean? It's still going sideways right here, but what does it mean when they touch? It means that it's when all your moving averages cross together, it makes it extremely easy for price action to go across it, to bounce over it and stay above it, right? So if your price action's under it, right, and then it's coming up from underneath, and all your lines converge. If you think of each simple moving average as like a threshold for price action to prevent it from moving up or down, it's like a resistance or support depending on which way you're coming from, resistance from underneath and support from on top. Then when they cross, it's easy for price action to slide through. And then, if it sustains on top of it and then bounces and goes higher, then it creates a resistance or a support, as it comes back down and it lands on it and it uses it to bounce off. And so you'll see that this kind of goes sideways, these lines go sideways and they converge again right here. They all 3 they're literally squashed together right here on this candle, on this one. So this could be a way for you to identify like when price is going to really take off instead of being caught in this up and down action, right? Am I saying you should trade this right here? No. What I'm saying is that when you see it starting to rise, don't be so trigger happy to jump in on this trade to go up. You're not in an up situation until it tells you it's an up situation. And so that's what I'm trying to show you is that when you have like these SMAs crossing and price is bouncing on it and basically going over it, on this trend line, it's pointing to where it should, and it does. and then price manipulates underneath it, but then soaks right back up on the next candle and bounces and goes higher, and then comes back down and pushes into it again, and then you have all three lines converging again, that's probably a really good sign that this is ready to go up now. And then you have, I guess something that you don't really see a lot of over here is consecutive green candles going up in this area, because you're kind of going sideways again, right? And all your lines are squashed together. So rightly so, if your lines are really tight together, then you're going to see price action kind of going sideways. So when you get two green candles like this, I'm not saying that every time you see two green candles you trade long. I'm saying that there's probably a good chance that it's going to go long, especially if you see that the SMAs are squashed together, they expand apart, and then squash together again, or price moves away from it and comes back down and the lines get squashed together again, right? And so if you look, this green candle that is our first signal candle of what to look for, the body is like right here, right? So this is the high and low of that body. And then you can see that this candle pushes right into the bottom. This is where all the lines are smushed together. It pushes right into the bottom of the low of this body right here. And the next one closes above the body of that candle right there. So some little tips there, some little tricks there that if you actually took the time to look at price action, you could probably identify where it's going to break out of this. And a rule of thumb, like I always say, is it's 34 bars, right? So it probably happened here. I'm close. Where is it? There. There's 34. Oh, it's my candle. Duh, I'm stupid. All right, so from the time it was low, it got into this consolidation area to magically where this arrow is pointing upwards into this area where the line smushed for the first time is 34 bars. The timing is uncanny. Maybe I should have started there. I figured that'd be too much of a coincidence. So anyways, so then it bounces for 9 bars, I'm sure. Let's see, from here, oops. And this starts at 0, so I don't know what this is the right one to measure. Probably the one before this. Yeah, it is. So when you do one candle, just so you see, it says 0, right? So this, it's counting this bar as 0, and that's 1 right there. So if I go, that's 1. So technically, it would be more like I start there and measure here. That's 9 bars. And then, let's see. Get rid of my mess here. Get rid of my mess. All right. So 9 bars, which is, it's one of my numbers. I have a string of numbers that I look at. And 9 is it's like a test. Everything is a test and retest. All right. That's one thing you have to understand. Everything is a test and a retest. And that's how price action moves. And we'll get into that on another part. But so once you break out of this consolidation area here and you test and then retest this area, right? So we test it here, test it here, and then retest it here, right? And so then boom, outcome goes out, comes back down, retest it here, ends up coming out and closing above this area right here. And so we just completed this test to the upside. It's bullish. And so you would enter your trade here. And so then enter along here. And then what happens, right? Right at the close of this candle, it's a 15-minute candle like this. It's so slow that, I mean, like once you see this setting up, and you have all the time in the world to figure this out, right? I mean, because if this is 44 bars right here, from here to here, then you know, what's 44 times 15? That's if minus 60. There you go. So 11 hours. You have 11 hours to figure this out. So I think you're good. You know. So how do we replicate this move, right? We look for a bullish break, you know, from a consolidation area. So we hit consolidation over 22 bars here, and then we have a breakout, right? It could stop right here, you know, and then come down from here. It doesn't really matter as long as we're holding the structure and not breaking the structure down here, you know. And so is this a break of structure? This might be a question that you might have, because we said that anything that breaks this low is a break of structure. No, because it didn't close down here. This is a sweep. And so this is one of the things that they're talking about a lot now is liquidity sweeps, right? And so what is a break of structure? A break of structure is when this bar would have closed down here, then there's a very huge possibility that it continues to go down from here. But if it leaves a wick like this and soaks all the way back up inside here above your consolidation, above this, you know, your lows over here, then this would be considered a liquidity sweep and possibility a setup for the start of a move up and out. Okay, so now again, you have 11 hours in this to figure this out, right? And so you have this run up, you see a push down, it doesn't do a break of structure, you see a liquidity sweep. Now you know that you're at least halfway through this move and you're getting really close to finding your way out. You see that price is holding a level as it's going up in a 45-degree angle going up like this. And then you see your SMAs squashing into a point, and you know your green bar sitting above it, which coincidentally happens to be exactly 34 bars. And then you see a test, which is the push down right here, and a retest after that 9 bars later, you know, into the exact same area. And what was the outcome? The outcome was that it didn't break the low that this one did. You know, this line's a little crooked, but let me straighten it out. There. You know, it didn't break the low, you know, that this one did right here. The wicks didn't even go all the way down as far. And the bodies actually closed higher. So the outcome is that it's more bullish. Second candle on the green side in a row right here, which is, again, is rare when you see it consolidating, because you see more red candles here, or, you know, red, green, or something like that. Now, so you get it on the test move up here, and then it comes back down. So this would be the second retest to the upside. All right. So that's, you know, again, you have another test and retest, and you have it going up this time on the opposite end of this test, retest going down. And so, yeah, this doesn't close as high as this candle right here, right, did. But it didn't go lower, and it closed above the high of these candles right here. So this could be slightly where it gets a little bit confusing, right? So let me get rid of my mess. Get rid of all this. All right, so let's blow this up. All right, this is where it can get confusing and you can kind of drive yourself crazy, because trying to remember all this on the fly is because your emotion, your logic, your greed, you know, because there's only 2 ways to make decisions. Emotion and logic, right? So you can be very logical when you're not actually in a trade, but you can be very emotional when you're in a trade. So this is the things that you have to strengthen with logic and continuous practice to understand these things. You can see them on the fly. Okay, so this green, this test reaction was strong. It was solid. It was big, right? Huge compared to this one over here. And so this one still didn't close above this red candle, but the wick went higher here. This one didn't even close above the red candle at all, but it closed green, and it failed to make the low. It failed to make the low that this one did, right? The body closed above. Yeah, this body closed below this low over here of these candles over here, but the that's why it came down again. It came down again to try to go lower, right? And it did go lower, but the body, instead of closing lower like this, closed up here. So that makes it bullish, you know, because they're closing back towards the high of this red candle over here. Still didn't break the high over there, but it showed potential going to the upside, even though it didn't break the high of that wick right there. This is a very confusing candle compared to all the other ones, but you just have to put it in scope. The overall purpose of this move is to test whether or not there is more potential to the downside, or is this thing ready to launch, right? You can tell by the wicks here that there is plenty of potential to the upside, because your body stops here and all your potential is here, right? Your body stops here and all your potential is here, right? Well, the bodies stop here almost across the board with slight potential, like slight more, a deeper push right here. But as far as your wicks go, all your potential lies here. It doesn't escalate going up, it de-escalates, right? It's diminishing. Your potential is diminishing. So are you going to waste time going down for something that's diminishing in potential, or drastically increasing in potential? You see what I'm saying? And so I think that's the main thing that you have to figure out and then be able to catch. And this is what they call an orb anyways. So this would be a good segue into this next part right here. And I've been using orbs forever, and I didn't know it was a thing, but I guess it is now. So with liquidity, now there's orbs. And orb trading is basically when a candle stops inside the body of another candle, right? I know I got lines everywhere. So let me see if I can clean this up. And this one. Okay. And there. All right. So what is orb trading? All right. So when we know that we're in a situation where we're low and we've just been consolidating for X amount of time, and then we get a candle that forms green inside a candle that's red, like this. It's basically like forming a pennant. A pennant is like a shape of a flag, right? It's a pointy flag where price action is funneling into a point. So the body is inside of the candle, the red candle here. Where the next candle closes is the next direction of your trade. And so that's how that works there. So when you look, and so another thing to help you with that is this. I would only look at an orb trade if I have potential to the upside, right? If I'm coming down from a push, but then also, what am I creating here? Another kind of pennant, right? If I go like this, now I have another pennant because I took my potential, right? My high over here and my low over here, right? I can go like this. Like that. Okay, and so now whenever you have a pennant, a lot of times what pennants like to do is they like to drop out and then hit support for that final grab of liquidity and then launch out. It's kind of like a springboard. Like imagine you're on top of a roof of a house and there's a trampoline down here, right? And you jump off the roof onto the trampoline. Well, that's going to send you into the air pretty far, right? And so that's kind of like the idea is like I'm going to basically build compression by dumping into the support level of liquidity where I know that there's buyers, right? And so I'm going to dive down into this area and soak up all the shares that I'm breaking these stop losses that have been built over this, because people are already anticipating that it's going to go long right here, right? This is inducing buyers right here. This is inducing buyers. See, it's long wick going up, and same thing over here was inducing buyers. This was inducing sellers over here, and now you see the outcome of that is it still made it above this SMAs while inducing sellers, made it above the SMAs, and now it's inducing buyers, pushing down back into the SMAs where the liquidity is underneath this. Boom, builds compression, and then slingshots it up. All right, and so then so the way the ordering is that when you have like this potential, this is a test up here. Well, technically this is the test here, and this is a retest. Retest was successful to the upside, right? So now when I push down here, this is a test, and my retest is over here, and it's a fail, right? It failed to go to the downside right here. And so now if this scenario exists, I have a potential to the upside that's greater than my potential that is basically flat or non-existent to the downside. And I have a red candle that has a green candle sitting inside the wicks, or I'm sorry, inside the body of the candle, right? And so wherever my next candle closes, here is where I enter the trade long. And then boom, you have this move. Now, let's get on to what we've been waiting for. This move. Where is this move going? Okay. And boom. Where's my box? Okay, my box is over there. I think I drew a line up there. Yep, there it is. And look at that. Watch this. So if you took your trade setup where the lines mashed together, or where the orb candle, orb candle had a breakout above it and closed, then you'd be looking at this massive move to the upside. Look at this wick. Good God, this wick is crazy. And then that would be, now this probably happened really quick right here. I mean, it's 15 minutes, so I don't know how quick that was, but you probably had plenty of time to get out, but you probably could have closed up here in the top 25 easy. But that's a total of 80 points. So that's 800 ticks. That's what is that, 8,000? It's $8,000 on one contract. That's insane. $8,000 on one contract. Do you see the potential here on a 15-minute? You have plenty of time to make a decision, plenty of time to analyze, and all you have to do is just be patient enough to get in when it's telling you. It's giving you several ways to read this trade, right? Giving you several ways to read the consolidations over, giving you the timing on how long it should take for it to be done with the consolidation, and then I gave you the blueprint on what it should do after it hits the 34th bar. It should be about 9 bars to do the test and retest on this area to see if there's a potential to the downside or a potential to the upside. I've shown you how to read the potential to the upside or the downside, and the test and retest. I've shown you how to do the orb trade. I've shown you how to read the SMAs to do the exact same thing. And I've shown you how to explain this very confusing candle right here, which actually makes it, if you see that very confusing candle, it should be easier to identify now, but should help get you into trades better. And then I exposed a 8,000 tick trade here that you can make off of that, just that analysis right there. Yeah, it takes time. That is a lot to go through, right? But once you get good at spotting these things, it's just like, okay, I have sideways price action. Where's my 34th bar? Okay, what's my potential here? What's my test and my retest? What's the result of that? Where are my SMAs? Am I bouncing off of those? Are they smashed together? Have they smashed together again? All right, I'm waiting for that to happen. Boom. All right, this is my trade right here. I get in once it closes bullish above this area right here. Sometimes it doesn't give you this candle. Sometimes it just goes straight into rocket launch mode. So you have to be ready to jump in if you see it taking off, right? But I mean, I think a good rule of thumb is this: if the bar goes past, this high right here, if you're absolutely late on this and it goes past this high, yeah, your risk is higher here. But if it goes past this high and it's done all of this to the left over here, you're fine. I think you're absolutely fine. Put your stop down here below this. Yes, it's a massive risk, but you know what? Huge gains. $8,000 in one contract. I mean, get out of here. Yeah, this is overnight for a lot of this, but I mean, what do you have to lose there? I mean, it's crazy. Yeah, the market could dump. You can take your profits right here. So let's just say that you took just a regular trade here and got out here at the end of this bar, 13.4. That's 134 ticks. That's, I mean, $1,340. That's huge. That's a good day's worth of money. So I think that is enough there to get you going. I think I've explained market structure, how to read whether you're in accumulation or distribution, how to read whether or not you're bullish or you're bearish, how to read what you should be anticipating when you're done with your consolidation, when you go into a test, the last test and retest, your timing of when you should be getting in, 9 bars after, looking for the results of is it bearish or is it bullish based on this test. If it's bearish, then it's going to do another dip down in liquidity and it'll probably come back up pretty fast. And then you're probably going to see a result right after that. Or it's going to fail miserably and fail to go up right here, fail to break this high and stay and close above it, and then leave a wick up here and come down and end up dumping, right? Because this would be a fail. It wasted all this time and they still didn't have enough liquidity, so it's got to come down, right? This area does not work, if that's the case. And so combine all that together and you've got yourself everything you need in order to be, a profitable trader. And I'm going to show you the results of that this coming up week. I'm going to do this exact same thing on there, because this week I got ate up because I was impatient and I didn't read the consolidation. See, this is what happens is I know all this stuff, right? I know all this stuff, but when it comes to trading, like I'm doing it live, I'm impatient and I'm not sitting here and analyzing it and making good decisions because I didn't know it's going to do all that. I didn't know it's going to be 8,000 or 800 tick run there. That's crazy. Like I didn't even know it. I didn't even know gold had it in it to do 800. I know that a lot of the futures do like 400. Very seldom do you ever see anything like 600 or more or something like that. But 800 ticks on gold is ridiculous. That's crazy. But it happens, obviously. And so you just have to be patient enough to wait for it, to take advantage of it, and and not be so ready to jump in on something. We got to get away from these smaller time frames. The smaller time frames they're eating you up. Now, if you just want to go in there and make a couple $100, yeah, sure, smaller time frames, you're good for that. But you're not going to find big trades, that are going to make you enough money worth your time and not eat you up, with constant being stopped out on a smaller time frame. You're going to have to find something that's got some movement to it, like this right here. Your first move is your test move right there. This is your gauge right here. So, and where did it go? I did double this, right? And look what it did. It did more than double that. It almost did. I would say it almost did triple. In any good move, you're looking to get 3 to 4 out of a move. Double is just keeping you going, right? That means that they got to do it again. They got to accumulate again, reaccumulate again. But triple and quadruple it's really where they want to be. But let's drop a line here. Look at that. And so boom, you get the wrong thing there. You get triple this move down here as your starting move. And so that's how you should be looking at it. Is like, is my starting move big enough for me to make money if I just get a 1-to-1? Yeah, absolutely. You know, so if I get double that, I mean, that's crazy. If I get triple that, but that's how you should be looking at it. Like, then you can gauge your risk. Like, I'm not very big on huge risk, right? So if, you know, if I'm getting in here, if I really want to be safe, I should put my risk down here. I don't know if I really like a risk that big. I'd put my risk probably underneath this guy right here, which is still going to be pretty big. But you got to find what works for you, what you feel comfortable doing. But that's 3.3, so it's not that bad. It's 33 ticks. I normally run with a 19, but yeah, I could stomach a 33 tick risk if I know I'm on a 15-minute chart and I'm looking at something that's got a potential of. Oops, I keep hitting the wrong button. Sorry. To 237 ticks, right? So am I willing to risk 33 for 237? Yeah, absolutely. You know, so if I do 37 divided by 33, that's a 7.18 R. Risk to reward, right? So I'm getting a 7R trade basically off of that, if you like to use those kind of things. But this, you know, the trades I see a lot of people doing, they're in these trades and it's coming back on them, you know, constantly before it goes up. The timing is just not right? It's there, and so they're seeing their profits disappear and reappear. Like it's like, so let's say they're trying to catch it down here, right? They're catching it down here, and you know, you look at your. I guess this is not that extreme on this side if I'm catching it here, but let's say I'm catching it here. Well, you're seeing 144 ticks, which is huge. 210 ticks, which is also huge. And you're seeing them disappear to like 58 ticks. And then this is going negative on you, 79, all because it didn't hit this high up here, right? That's going negative on you, 70 or 82 ticks, 79 ticks. And that's where your stop would be. Like, if you're trading this, then your stop would be probably, to be safe, is under there. But you know, if this liquidity comes down and gets you, no, you're good right there. I mean, it's coming down and grabbing all this liquidity right here. So I mean, you would have to be, I guess, at that next low there, which is 34.30. You would need to be 30 right there. So 136 ticks. That's a lot. Not gonna lie. I like 33 better than that. So if you wait and you wait for the timing, your risk is extremely less. You know, 136 ticks is crazy. Where's my? Give me this. I mean, it's $1,360, and then the other one is $330. So am I willing to risk $330 to go up 8,000, or you know, do I want to risk 1,360 and wait, you know, 11 hours to get you know, potentially 8,000, right? If you don't get stopped out by then, because I mean, coming back 79 ticks is rough. So I don't know. Stuff to think about. Anyways, this is I Can't Wait For It. I've eaten up enough of your time. Appreciate you. Thanks for tuning in. I'll see you on the next trade. Happy trading and goodbye.